go. Okay, share screen. Yep, there it is. Okay. Good evening, Mike. So, as I mentioned before the recording, we do this on TradingView because the indicators that we use are only available on TradingView, but hopefully they will come up for Kiyotaka. Well, one is not even proprietary. So let's go with the tools. So TradingView, two indicators that we need here. The first one is by in silico. So another reason why I give this strategy really as a gift, because we get these as a gift, is exhaustion levels or letter DC levels by in silico. Okay, you want to pull these up. These are some of my favorite indicators. TradingView, there's more, but these are, my opinion, best ones. I will probably talk about them in the future, but you want this one, okay? LEDC levels by in silico. It's a very great tool. It's free, open source. It's free, so you can use it. They add some invitation-only indicators as well, but they shut down that part of the business. Too bad, because we lost access to some very cool stuff there, but they left these ones, so use this one. Second one we want is called an inverse Fisher transform. Wait, I made a typo. Inverse Fisher transform RSI. Okay. I use this one. Inverse Fisher transform on RSI. Ah, shit. Screen dropped. Wait a second. Yeah, I had this problem before. Share it again. Okay. I will keep an eye on it just in case. It happened a couple of times last week that the streaming screens stopped. Let's see if it holds. Otherwise, I would have to use a different streaming platform, but I don't want to do that since Discord is very convenient. Okay, so the second one is the inverse Fisher transform. It's recorded anyways, so you can also look it up later if you missed a few seconds. First one, as I said, is these by in silico, the one I'm touching with the mouse pointer. Okay, LEDC levels by in silico, and the other one is the inverse Fisher transform on RSI. Okay, why I use these two? Well, you can look at the you can search about the inverse Fisher transform on RSI. Just do a Google search later. The formula. Oh god, again. What's wrong with the stream? I don't know what's going on with Discord. Anyways, look at the studies, they're very good. You can keep getting notification from Discord. I don't know what's going on. So you just turn them on here, okay? 1 and 2, okay? This is the RSI, and This is the in silico one. As for the settings, we want these settings here. Okay, 40, 10 for the exhaustion bar, and 2 for the thickness is fine, but the swing length 40 and exhaustion bar 10. I found it's not too noisy and we can get good signal, good print for that. So if you want to screenshot these for later, these are the tools. Okay. Then as I said, the rules. Sorry, I don't know what's going on today with the streaming. Keeps dropping. Rules. Part 1. You have to wait for an exhaustion print. Okay? So the silico indicator will give you exhaustion in a direction. It will print an arrow just as an indication, as you see here, but we have a look at it later. And the print is going to print a line. Okay? Second rule. The oscillator, you need to understand how oscillator works. Okay? It has a delay because it prints on the candle, so at the candle close. So ideally, when you trade an oscillator, you have to wait for the oscillator to cross one of the two lines at the extreme, right? Those are, again, just distribution, standard distribution. Standard deviations, okay, from the mean. That's how oscillators work. All right. In this case, we have a 0 level, okay, a +5, and a -5. So the rules. Oh God. So let's pause this for a second. Should I try to restart? Has anyone had this problem before? Because I had it a few times to drop it last week. Should I try restart the live? And also the app, right? Give me 10 seconds and I'll be back. Sorry, but I don't know how to control this shit. I'll be back. Okay. Let's see if Discord does me the fucking favor to hold the streaming for more than 3 minutes straight. Okay. I will just cut the video when I upload it. But anyways, rules. So number 1, wait for the exhaustion print. Number 2, the application of the oscillator. So you ideally, that's where you want to open a position, like at the top or at the bottom. What's the problem? The confirmation comes at the line cross. Let's say as a long position. You want to enter around here when the indicator is at least pointing up. or crosses the line, but you might be late at the line cross, unless it's a larger swing. And you want to close your position here. However, the problem is that an indicator can stay in this department for quite a bit, and you might miss some gains. Okay? So what you wanted to do is to rely to other signals. You never use an indicator alone, but you use it for confluence. So for example, indicator pointing up, support level printing, plus volume and other things that we're going to look at, that's going to be very good to use. Then it's going to be reliable. Oh, fuck. I will have it sorted somehow. I will have a look at it. I will just keep an eye on the streaming for now. So, second part of the rules. You apply price action, okay? As we're going to see now, we get into it. Actually, what I can do is pull up a chart here. Yeah, easier. So as you can see, it's not going to always bounce on the print, on the pivot, okay? Sometimes it's going to be very precise, like here. Other times it's not going to be precise. So that's why we apply price action, for example. So this will be a seller exhaustion signal that starts to print with this big ass green arrow and a line that will last until a new pivot is printed, right? Very simple. So we don't mindlessly long here right away, okay? We want to wait for other signal confirmation, but this is our trigger for attention. Yeah, of course, like sometimes it's going to bounce, okay? But we want to use some discretion, okay? Second thing, we look at the inverse fissure, okay? Yeah, here is pointing up, but as you can see, goes back down again, and you might get stopped here if you just open a position. So you don't want to front run an indicator, just as you don't want to wipe your ass before you take a poop, right? So generally, when one of these signals print, same as when we have a crossover, we have actually candles in other direction, okay? Sorry, I have to stop every 2 minutes to restart the streaming because it turns off for some reason. So those are the candles that you're looking to fade normally. Okay. So after a print here, and I'm using this on purpose. Over these prints here, you're going to have candles in the opposite direction. One right away, maybe another one following. These are the ones you want to fade, okay? Now, this one is a bit toxic, as you can see. So that's why we trade our stops. You can always re-enter later. Okay, it's fine. Trade it, stop out, see what happens here, and you get in again. It's not a big deal, especially if you're on the 1 minute chart and this happens. I suggest you use an exchange like lighter, for example, because you have no fees on the 1 minute. Or you just wait for another confirmation. Now we'll move to the second part of the rules for the indicator. So let's take another example here. Well, this is the newer session, which is not the best in my opinion. I think the London session and Asia sessions are much reliable, because the volatility on the newer session is just all over the place due to a lot of different type of traders, not just algos but also live traders. So as you can see here, is much more mechanical. Okay, you can usually fade the candles that break below the pivot, right? Just fade it and open a long. Same thing. Here you fade it. Here you fade it. Here you fade it. It's quite mechanical as a strategy. You don't fade the you don't open a position right on the print. You fade the re-enter. So here actually, when it re-enters or when it goes at the bottom, you fade this move and you set a stop above, because you don't want to be taken in something like this. Okay, like these moves against you. If you, for example, happen to fade this one, you will be stopped out here. And you always set the stops. So this is a mechanical strategy. What does it mean? It means you don't have to think too much. You have to respect the rules, because the rules statistically work. If you start thinking, oh, I got stopped out, but maybe I can get in again lower, nah, leave it. It's going to happen again 15 minutes later. Not a big deal. Just wait. But you really need to respect the rule. Okay? It doesn't matter. Like, if you even take a, you don't even need to backtest it yourself, but I suggest you do. But you can just count. Okay? Of course, these ones you get stopped out. Fine. Here you can profit something, because you want to trade your stops and you want to take profit regularly. Okay? On every move, you take your stops regularly, and if you do it on lighter, also you have no fees, so who cares? Small position, okay, no leverage. You just set a portfolio for that with the size you're comfortable with, and you slowly scalp it. You can scalp the bounces, you can scalp the big moves, you can do it on the 15-minute chart. I will have to do a lot of cutting. So the New Year session, as you can see, is much more hard to manage because of these insane spikes that we get in every direction. It's just a rush for liquidity. But if you do it in the Asia Euro session, those are fine. Those are fine. And I'd say most of you have access to at least 2 time zones. So it's not a big deal, wherever you are. So, is the in the set of rules, third one is entry on the retest. When we break through, or when we approach a breakthrough, indicator pointing up or down if it's a short, then we can long and set the stops as I explained. So fade the following candles, the ones that break beyond the pivot, okay, so above a red pivot or below a short pivot. Stops. The stops, well, let's make an example on a, again, I don't like the New Year sessions for this. We could do really trying not to curse too much every time the streaming drops. Okay, so in such a scenario, so here's a separate case I will tell you later, because this is an extended pivot, as you can see. But here, yeah, so your stop will be here. And the take profit you can do in different ways. You can use a Fibonacci. Where the heck is the Fibonacci? There we go. I hate the magnet. So you can use the Fibonacci, for example, and you can just take profit around 0.6 generally, between 0.5 and 0.786. Okay, so I set it around here. Option 1. Option 2, first pivot. I mean, I generally take the profit as soon as I see another pivot against me. That's going to be a very easy way. First pivot, you take profit, just in case it reverses against you. Extended target could be a Fibonacci, and maybe you close another 50% of the position and you let run the rest of your position. Just always trade your stops, right? When you're in the, let's say, when you're around here, after your entry, move your stop up. Move your stop at entry. Unless you really had a crazy good entry here, which you just set the stop at entry. But when price breaks out and trends, and you see that we're moving towards the red zone, red line here, or reverse in case of a short, you'll move your stop to entry or in profit. For lighter, I actually move it a little bit above, because there's a lot of delay and slippage, okay, because I cannot use the terminal. So this is how it will look. So entry here, stop here. And let's say we expect, it's a scalp, so we don't expect insane returns. So let's ignore the risk reward ratio. Entry, price moves here, you move your stop at entry. Okay. Price around here is approaching the red line, crosses the red line, you move your stops. Take a profit here, okay, on the red pivot, your stop goes here, okay, on the last bounce, because it's exhausted. So even if you get stopped out, both your orders, well, this one is in profit, the one where you took profit around here, and the second one, if you get stopped out, is still in profit. Okay. Why I say I keep saying lighter, because you don't have to worry about how much percentage you get here. Okay. This could be potentially, but realistically, no one is going to exit perfectly, but potentially, let's say you take out 50% and you close every time, so the position gets smaller and smaller. If it's worth it, if it's a very small position, just close off and then close the rest. But if you have a larger position, if you make a 0.6% on a trade like this, just picked it randomly. Another issue here is if we have a very long pivot, okay, you need to change your approach. But if you've read my articles on price action, you know what to do. So you see these as forming a triangle on this resistance, okay, support, sorry. So you don't long this stuff. You only short it. Okay? Every bounce, you fade it. Not because this is a big chance, but because you open your short, ideally before you recognize the pattern, you're going to be here. Okay? You just short this. Because chances are it's going to break. And when it does break, you're making some money, more than you would have expected, because these breaks then run for a few minutes, okay, or a few hours. So you need to use price action. So why we don't use our own lines, okay? The ones we can draw on Kiyotaka, for example. Well, because these lines are for major levels, but you can still do something when the price is in these areas where you don't really know what to do and can be there for a day. You can find something here. This is called microstructure. These things last for 1 hour, but we can use it if we scalp. Actually, we need to use it, otherwise that day we're not making any money. And of course, after it breaks, you start trailing your stops and taking profit. If you use the 5 minute or the 15 minute, you can do it on any normal exchange, or also using the terminal with, let's say, Hyperliquid or Bluefin. That's absolutely fine. And for Bluefin, we also have some 25% discount on fees, which is not bad. So it's basically costs the same as Hyperliquid. So it's ups and downs, right? Some exchanges you have fees, other exchanges you don't have fees, such as Lighter, but there's low as fuck. So you have 300 milliseconds delay. And trust me, trading microstructure, that delay is something you have to account for. There's going to be slippage, okay? Nothing's easy, nothing perfect, you have to adapt. Another good thing is that you will learn a lot about market structure. Of course, don't do it today. Don't trade this stuff on the weekend, because as you can see, there's not enough volatility for anything like this. Just go read a book or play outside if you're lucky and have good weather. Here's the weather. Here the weather is shit, so I can't even do that. Take profit, exit. Yeah, we got everything covered. Then of course there's going to be a Q&A at the end. Let's just keep the Q&A on this strategy. There's another live tomorrow. We can discuss anything else there. Made a typo here. So yeah, when oscillator is at the top, this is important. It can stay there for a long time. You need more confidence. I already talked about this, but it's good to repeat. Do not front run indicators, okay? You need confidence. Like, of course, if there is a bounce like this, same rule. You're going to miss this candle because that's where it prints. You can always fade a pullback and follow the move. Another thing is with oscillators. So here you short when it crosses in general, when it points down, and you long when it points up. But let me look for when he's okay here. You long. You can long. It's not an absolute, as I said, but you can long if it comes down and it crosses again without taking the opposite level. I don't know if it's clear. So goes down, okay, you long here, but if it doesn't take this level, like this one, you can just long again here, same as you can just short again here. Okay, it's the same type of signal as a cross from here if the opposite line is not taken. There is a lot of research on this type of indicators. Just Google inverse Fisher transform and you will find a lot. Read the studies. Okay, a lot of smart people spend a lot of time to prepare these indicators, right? And there's no study for the Silico one, but the code is open source, so you can just, you know, even if you do not code in Pine, you can just throw the code to a clanker, and the clanker will return like an explanation of what's going on, right? But of course, everything has to be matched with price action. This streaming is very hard because I need to keep focusing on the fucking screen for the streaming instead of the chart. Okay, questions. Which was the oscillator RM inverse Fisher transform RSI? I have in silicos. I don't have in silicos, but sorry, you mean the DC? Yeah, is called. Let me search it again. So inverse Fisher transform on RSI. It's this one. Mike. Inverse Fisher transform on RSI. What are the pivots, baby? So, yeah, I will get to that. If you cannot find it, Mike, I will post maybe the page from TradingView. I will send it in the. Let's see if it's this one. Maybe I can send it in the trading room. I think you can get the indicator here, and you can just check. Okay, I pasted the link in the trading room. Screen isn't showing. Yep. No, that took a lot of focus. Okay, so yeah, it could be Discord not updated, guys. Okay, I will check if any update is available. Got to ask, are the fees really high scalping Bitcoin 1 minute? Yes, they are. That's why I don't always use lighter, but I experimented. I think if you're starting as a scalper, the best thing you can do is use lighter. If you want, I also have a ref code in the resources, and we share the points. And there's no discount on fees, obviously, because the fee is 0. But there's leakage. The fees on Hyperliquid, or to me, it's like 0. It's actually 0.09, but I count 0.1 just to stay on the safe side. The pivots are based on a lot of shit that is not completely disclosed, but you can put the code, for example, in a clanker and get an explanation, but it's exhausting. So it's looking at volume, it's looking at moves, it's looking at previous pivots. So if I remember correctly, so it's quite consistent here, as you can see, and it has zero delay because it prints the arrow prints during the development of the candle. Okay, if it closes, let's say green pivot, you want the candle to close green. Mine is gray, but you want to close positive, right? So while it's developing and it's in the positive, it's going to print the arrow, and then it's going to print the pivot during the next candles. Okay, so this one has very little delay, but you want something with a delay to balance that. But you want to basically treat these as a swing. So high velocity moves, when it encounters a resistance, are more likely to bounce. Okay, low velocity moves, you probably see a different type of movement. But again, high velocity move goes down, bounce back, there's going to be another attempt. These just makes the job easier for you. Okay, just makes it easier to find these levels. It's something that one can do. I don't even use it much anymore, or at all, actually. I used it this week to get back to it, but it's very easy to learn about microstructure here because these levels, they're very precise, and at some point you will just turn it off and read the chart by yourself just by using volume, right? For example, big ass volume here, reversal on low volume. This is a bounce, but it's also something you can fade up here. So this is just going to help you find these levels more easily and make you more profitable while you learn. Because the problem is that while you're learning, normally you use money. Some of these strategies, they're very profitable. Of course. So what's the next question? And 0.1% fee approximately, got aim for bigger move. Yeah, correct. That's why I would say don't use this strategy on the 1 minute unless you're using lighter. Use it on the 5 or 15 minutes. That's plenty generally to get a good move. Of course, it's scalping, so you're not going to make 10%. And don't use leverage, of course. So you're not going to make a 10% move here. But you know, you can make 1, 2, 3, 4, 5% in a few days on the 5-15 minutes just with this strategy alone. Then you can use a rotation of strategies. It's fine, because it's not always a good time to use these strategies. I said, like New Year's session, it's not good. Not now. Used to be, but not now, when the market is absolutely schizophrenic here and levels consistently are ignored. Just so like this thing is just a meat grinder. You don't really want to trade this stuff. Got it, Mike. To confirm, within Silico's level, appear on close of candle time frame dependent. Yes. However, you need to adjust these settings. Okay. So these are the settings for the 1 minute. The standard ones are good for the 15-30 minute. Okay. Well, maybe these ones are also good for the 15 minute. You have to see what you're more comfortable with. Because me, I can tolerate more noise than other people. The entry and stop are market order only. So if you scalp a chart on the 1 minute, if you use lighter, just use a market order. Okay. If you use, let's say, hyperliquid, but I suggest you accumulate a little bit of experience before, or you use blowfin or anything. This one you might want to use the 15 minute. Then I will use limits for exits. Okay, we will also look at how to do that by reading the books. Signal is back. By reading the books. And so also the order book is going to give you an indication of where to put your limits. Okay, but I don't think the majority of you is able to just look at the book and find the point of local resistance or support to place a limit before. Okay, and as much as you don't want to front run your entry, you absolutely want to front run the exit. Okay, especially when you approach very big levels. Okay, I suggest you hop between charts, or if you have supports and resistances here, it's fine. Otherwise, you hop. That's what I did the other day. I was just hopping between Kiyotaka and TradingView, because the reaction here is absolutely different compared to what you get in the middle. Okay, when we're here, price behaves much differently, as you can see, when we're along these resistance and support levels. Whoa, new indicator by backquant, guys. Multi-EMA, lovely. Okay, so other questions. Let's see. Lycle City go fit thing still decent. Yeah, these are decent moves. You can definitely, like, if there is a move, you can trade it. If it's large enough to trade, like maybe this one is too small. No, this one is good too. Like, because we're on the 15 minutes, of course. Everything's good on the 15 minute. Everything is very good. The 1 minute is harder. Also, you can make more trades to get more return, but also you have more risk of making a mess. So starting from the 15 or 5 minutes, I think it's good. Okay, it's scalping. So meow. So you just watch the candles without indies and know how to scalp, or you using Fisher anyway? No, I don't use Fisher, but this is a good strategy that I used at the beginning. And I use, instead of Fisher and instead of pivots, I use price action. Maybe I drop some lines, okay, just temporary lines, small lines, and I use the DOM. But that stuff, as a learning curve, I will make a lot of explanation about that. I will write the article. I will make streamings like this one, and also some in the psych ward about the DOM, but it takes months to learn. Okay, this strategy, like many other strategies that I will drop, some public, some in the psych ward, are going to be something that is faster for you. Okay, something you can apply right away. Of course, don't jump into it, backtest it, do some how to say, what they call dry fire. Okay, so you want to observe the market maybe for a few sessions, how it behaves. Even on the 1 minute chart is fine. You can just observe how it behaves for a session or two and apply the rules that I gave you, and then try for yourself. Avoid the weekend because this price action is shit. This is really not interesting, and I suggest you avoid in your session. Then you do you. But you see, this is the weekend. Like, these are like just not moving. So basically for day trade, lighter is really good since you don't need 10 millisecond execution. Uh, yeah, yeah, I'd say lighter is good because it has no fees, but also in day trade, the fee doesn't have that much uh, like influence on your returns. So it kind of, at that point, I'm going to use a platform that I use that has complex orders, for example, like the terminal where you can set complex orders and stuff like that. LiDAR, I would say the only use case is scalping on very small moves. All right, bye, Mike. And because because the fees eat you up, okay, piece by piece, but on a day trade, the fee is irrelevant. Or mostly, like in your losses or in your gains, that 0.1% is not going to make the difference it makes on a like 0.2 or 0.3% move. Okay, so yeah, that's the thing. But start from the 15 or 5 minute, and it really doesn't make a difference with your trade. Like, this is only if you want to scalp the 1 minute chart, which you can, but I suggest you start from higher time frames. This is just my advice. I assume it's hard to trade these on props such as breakout on the 1 minute. Yeah, but dude, 5 minute. Look at this, same thing, same fucking thing, and you have 1% move here, 2% move. Well, this is New York. We don't do that. Let's say this short here. You can fade. This one is very clear. I'm really losing my patience with Discord streaming. Where is it? Short. Yep. Let's say we're not perfect, okay? So we exit before this print because we're satisfied. Still 2%. Oh god. I really hope it's just the app that is not updated. So this one, you can make a 2% here. Let's say we're not perfect, so we get in after. You can make a 2% here. It's fine. Prop firm, you have a 10% for evaluation, as in you need to make a 10% gains. So you don't need many trades on the 5 or 15-minute chart. And your stops are airtight. Okay? Your stops are fucking tight. You don't use leverage, of course. You just set your stops super tight. Like, you can scalp these bounces here in the 15-minute. You can make quite a lot of points on this. Or you can fade this absolute move here. Like, same. 2 candles, these ones, you fade them. I will have to edit all these silent moments where I restart the feed. You can fade you know, these candles here, set your stops above, never taken, just let it roll. Like, that's a qualification. It's done, I think. No, it's not done, but it's half done. Say you enter late and you exit early.